Welcome to the Finance Village podcast, where we navigate the dynamic relationship between financial professionals, their industry, and the clients they serve in an ever-changing landscape. Let's begin.
Welcome back, everyone, to another episode of Finance Village. I've got my special co-host in today, Nick Giovanetti, one of my favorite financial advisors in the country. Today's topic is the future of financial planning, embracing fintech, AI, and generally the changing landscape of advice in Canada, and exploring how these new technologies, but also new norms, are reshaping the financial advising landscape in Canada and beyond. Start off, Nick, by talking about the fact that most advisors in Canada, we're talking about the future of financial planning and embracing technology, but most advisors in Canada, if I recall correctly, and I think this was a statistic, it's probably an older age now, most advisors are over 65 years old. Thankfully, we've got a lot of young advisors coming into the business, younger advisors like yourself that are seasoned and tenured, that are buying books of business and collaborating with those older advisors to kind of take over that process. And it is a bit of a process to get those older advisors, forget just trying to get them to adopt, but when you come in as a younger advisor these days and buy with one of the many books of business coming up for sale, even to get them to hand over the authority to make some of those maybe urgently needed or desperately needed changes to simplify things for clients, and not just for tech-savvy clients, but even for older clients that they are dealing with. That is often the bulk of their book. Those clients don't want to fill out pages upon pages of PDFs and such.
I'll start off with a little background. I partnered with an advisor who's been in the industry a long time, very well-established book of business. We sort of merged our businesses together. And I think that what I noticed right away was that there are advisors out there that have created a process for themselves that works. And a lot of advisors don't like to stray from the process of what's working for them. But the difficult thing is that industry and technology and client experience and even just regulations, they change so quickly that you have to be looking at this type of stuff all the time. So, our experience was we came in and there was very little technology to the practice. Most of what was being done with paper. Printer companies like Canon and Xerox, they love this office because they were just having printing like I've never seen before. There was very little online documentation of filing. Like there was a CRM, but it wasn't really storing a lot of the files. Those files were being stored in the good old-fashioned paper file format. Same thing with, when it came to financial planning, a lot of technology wasn't being leveraged for financial planning or calendar scheduling or anything like that. So, when I came into the firm, I saw a few things that right away I was really hoping to change. One of them was just integrating our communication. So we got everybody on the Microsoft 360 suite. We hired a tech company to run the technology of our firm, making sure our cybersecurity and everything like that was protected. We interviewed some CRM companies that could store files and timestamp things, so that we no longer had to have paper files floating around. Everything's going to be stored in a cloud-based format, stored in Canada, where everybody's able to access things from their phone, and it's also time-stamped for compliance. So there was a few things. We can unpack it as we go here, Sheldon, but there's a couple things that a younger advisor or a newer advisor coming in that's more tech-savvy is going to notice right away, and we were able to make those changes within a couple of weeks. It took a lot of effort to implement some of those, but based on my prior experience and tools I was using that I like to use, I was able to bring that forward, present it to the team and to the firm, and get everything implemented.
Well, and I'll just ask you quickly, because it's and I think in technology implementation, two of my maybe favorite words would be is the same as financial planning is it depends. So is it better to kind of change everything in the process all at once, or take one thing that's digestible for the people to kind of consume? And I would almost categorize that there's kind of two segments of technologies. Some that are really easy to adopt. You think of something like a Calendly or a Fathom or Assembly or one of these AI note takers. This is the type of thing that a Neanderthal could adopt overnight, where other things, perhaps like a CRM or a document storage, like a side drawer or Salesforce, while they bring a lot of value once you get them implemented, they can feel like a little bit more of changing to the process and a learning curve to get kind of in the groove and using them. So those are the kind of the two segments, and we'll talk about those in a bit. What was your experience with kind of, did you try to change a lot at once? Did you kind of go a step by step? And what did it look like in having that conversation culturally with the people?
I think that what's really important for an advisor coming in that's partnering with a firm that already had their checks and balances in place, that has to be respected. And you have to respect the fact that they have a fully functioning business. It's functioning with or without you. And you're actually trying to come in to enhance that and to bring it to the next level. So that doesn't mean ripping it down to the studs. I think a lot of what we did was, my senior partner, advisor, keep running your business the way you're running it. What we're going to do is we're going to try and wrap some technology around you so that we can communicate better together. And a lot of this paper type stuff that you're doing can still take place, but we're going to slowly move stuff into being more electronic based or electronic focused. How we communicate with each other, we leverage Teams network, we're doing chats, we're sending files to each other. I'm not a big email guy. I hate seeing my email box, filling up throughout the day.
Congested. Thank you for saying that. So congested.
Exactly. So the idea here is we all want to take a lot of the minutia away so that we can get back to doing what we do best. More interactions with clients and prospects, more time sitting and talking with those people and changing their lives. So things that we can take off of the plate, having to handwrite things out or print things out and create folders for everybody that you're going to go present with these 100 pages. I just don't think that is super efficient. So you got to respect what is already there, and you got to find quick wins to make your life better. I knew that I needed some things that had to be there. I had to have a CRM I could upload things to. I had to have Teams I could communicate easily and share files easily. I wanted to be able to quickly tap a button and call my assistant and pop up on her screen, right? Like the Teams functionality. So we needed group chats, like no more emailing, all this kind of stuff. So there were quick wins there, and now it's been about 18 months. We're really a completely different organization. It took us months to go from paper files, getting it into a CRM. Took us months to have staff retrained on new tech and tools. And you have to pick what is the most important. Give everything a ranking. What is the most important? We had to get off our previous CRM because I didn't like that the files were being stored on a US server. So we found a Canadian CRM for storage on Canadian servers. And then as well, we have to double check things with compliance. So if you're licensed for investments, you have a little bit more stringent compliance you got to pay attention to. So we made sure that we implemented what we could implement, and then what we needed to do slowly over time, we had a roadmap.
Well, there's a lot of quick wins, and sometimes what you've kind of, demonstrated a bit through your explanation is it's not always about you're uprooting a process or you're changing a process as far as you're changing the actual process. You might just be changing the methodology of how you were doing something. Again, and I want to hyper focus on email for a second because I have tried every email client under the sun that I could find. There was, most people conventionally using Outlook. Then you've got things like Superhuman and Spark and EM client and a whole bunch of different ones. Nobody has really solved the email problem. So I think, for sending all those quick messages, you want to be on a messaging system like a Slack, a Teams, something where you can just have a quick communication rather than continuing to congest email. We send a lot of documents through email. That's not necessarily your most secure method. It's not necessarily the most organized method. Since we've switched with our mortgage brokerage over to using Finmo and just being able to have it send that list out, and it sends the automatic reminders. It shows when it's being satisfied. It goes directly to the place. It's really easy for the clients. And even as something as far, and I'll always do my plug for Pocket Finance, is introducing other team members I'm now sending an email introduction to my accountant, to a realtor, to an insurance advisor, financial planner, and all they're really seeing is maybe if I put a LinkedIn link in there, or I can refer them to the website. Maybe there's an email signature that they're able to see. But I really like the idea of the client quickly being able to see who they're actually dealing with. And then I don't necessarily love having to go and chase to see, okay, I remember I sent a client to Nick yesterday or whoever it is. Now I want to make sure that something's happening there. So I'm going to go search through email to make sure Nick replied. So there's a lot of shortcomings in email that can be solved with those small, short things. And sometimes, again, it's not a matter of upheaving a workflow and creating a new one. It's just making it so that same assistant is using the same process, but instead of them pressing 10 buttons, maybe they only got to press 2 buttons. And those little pieces, and it doesn't often get appreciated enough. Too often we might be looking for this big, fat answer that fills the whole box of some solution or change, but often it's a bunch of tiny ones. So those little, 10-second savings in this part of the process, 10 seconds there, and you accumulate that over a year, it's a pretty profound impact. And it's not about, people losing their jobs or AI or robo-advisors taking over. It's just putting the human up to that highest, best human use.
You bring up a good point there, Sheldon, that I'll touch on. I mean, another quick win for us was just note taking. When you have meetings, it's very difficult to be able to capture everything from the meeting. And a lot of advisors are very relationship focused, and they're trying to jot notes, and sometimes it looks so terrible it's not even legible after, and you don't understand their short forms and things like that. So another quick win is having a note taker of some kind that you can then bring that value to everybody in the firm to say, hey, we're all going to be on the same note taker, which just captures our meetings, captures the dialogue. We can quickly upload summaries to CRMs. And if every meeting is documented in that form of note taking, it's legible to everybody. And then it doesn't matter if that person's away or if you send a note to your assistant that I need something done. It's like, here's the summary of my call. Can you make sure ABC are done by Thursday next week? Anything you need for the client is in there. You can search it. You'll find what you need.
Well, I want to highlight one key component of what you just said and really a better understanding of AI. I still talk to people on a daily basis that have not yet even heard of ChatGPT, which is like, it's one thing not to be using it because you have like all these, concepts about it. But for people that haven't even heard of it, it's a bit spellbinding. But I want to highlight the aspect of nuance. So I was in a meeting this morning, and there was a gentleman who's kind of, a skeptic of the early versions. I don't think he's used the 4.0 or whatever it's called, most recent version. But he said it's not super smart. It's like having 100 monkeys on 100 typewriters. I don't know if that's necessarily the ideal kind of analogy to break down where ChatGPT and AI is, but I will say this. AI is great for infrastructure. If you want to put a whole bunch of messy, unorganized thoughts and ask it to put into an infrastructure of organization, that's probably the thing I use it most for, is infrastructure. But AI is only as good as the nuance you give it. And sure, you might say, no, I'm one of those old school handshake people. I like to take my notes on paper and make the client blah, blah, blah. The client wants you to look them in their eyes and pay attention to them and give your best, highest quality of listening skills. There are things, so not only is AI only as good as the nuance you give it, a lot of people will go to use ChatGPT and they'll give it like 1 or 2 lines of instruction or question. I would submit to you that you should be writing a paragraph, that you should be uploading additional documents for context. As much nuance as you, the human, can give it is what you're going to get for an output. But even in regards to the note taker, Nick, if I tell you that I have $10,000 in a line of credit and $500,000 in an RSP and I have this, these are things that just a monkey can write down. Any robot can just write those things down. I would say that with the AI note taking, you should still be taking some notes as a human, but you're going to have more eye contact and more attention, and you focus now on the highest level of the human notes, which is that additional nuance that you're interpreting from their micro expressions, from the words that they use, from the tonality, and all of the things that not just AI can capture, the basic things of summarizing assets and liabilities and the basic things. You're now looking to capture that higher level of human nuance, and that's where I think it's going to become, again, a lot more interesting. We're going to be able to focus more on that human behavioral, coaching kind of really human aspect that is going to become more valuable in everything. Even if you look at, producing video, the people that write books that only write them with their human hand and don't use any ChatGPT, people will read AI created books, but there will become a new appreciation for that human nuance and that human interpretation. So AI note taking, I think, is a great example of that.
Well, and like to get back to that AI and you mentioned something there about the behavioral. I mean, where the profession has gone is it's become more the advisor or the financial planner. They're bringing critical thinking. They're bringing that critical thinking element, the human side element, the behavioral coaching, the real, not so tangible value than just a calculator. Like AI to me is like the power of a calculator. I can type in 25 times 1300, divided by 3, and et cetera, et cetera. I can do that really quickly versus having to sit there and long math write it out. So I can be in the moment longer. I can have a faster conversation. I can deliver more value than a client sitting here watching me work out long math. So we're just at that stage of the game now where anybody in the financial profession, they got to skill themselves up. And that's the value that you're going to bring. And so senior advisors, it's not that they don't have the skills, but a lot of the time their day to day is bogged down by minutia. They're not leveraging technology, just like, building a canoe by hand or letting a machine cut the wood. I mean, they're just doing it a lot of times in an older fashioned way where there's more of that pride of craftsmanship. But really, we're now looking for pride of advice, pride of critical thinking, pride of behavioral, psychological management of how people view money. And you're there as that buffer, that sounding board, right? Them typing into ChatGPT is only as good as what they put into it. So then you need somebody else with that critical thinking element.
Well, one of the big things I run into in this conversation, because I'm like a big peer pressure of everybody that I meet. It doesn't matter if they're in the industry or not. Like I was buying a condo the other day, and I ended up paying $500 to a condo document review place to review the condo docs to make sure the condo management board was in good shape. And I took probably 18 documents, PDFs or so, and put it into ChatGPT, and I asked it some questions, and I kind of asked it to give me a certain summary about certain things. And then I sent that over to the guy who was in his early 60s, who had not yet been using that. And he's like, how did you create this? Now, definitely the advice that he gave me during the additional half hour, 40 minutes on the phone was incredibly useful, but he was now able to streamline, again, just to that most helpful human nuance instead of going over some of that, because all the condo documents are in different, there's no standardized format, and it was kind of whatever. So he was impressed by that. As a consumer, I was able to kind of get some of that out of the way, just quickly having a conversation with ChatGPT. But one of the things that I've noticed in those conversations where I'm pressuring people to at least explore and see what's out there and experiment a bit, is advisors are very nervous about compliance. Tech adoption. How do you make sure that it remains compliant with regulations? And it's a little bit different in that captive world. And I'll ask you, for anybody that's maybe looking to get into financial advising, or any of the consumers that are listening, explain the difference between captive and independent for the consumer, and then maybe explain for the advisor. And I can't recall, Nick, if you have any captive experience, but what is that difference in trying to get the approval? Because sometimes they really just want you using their in-house tech. But even within those ones that are very strict, there is typically still some things that you're allowed to use. Again, those simple ones, maybe like an AI note taker or a Calendly. So give us, for the consumer, a definition of captive versus independent, and then maybe give us your view or the experience or things you've heard of when an advisor wants to adopt technology captively versus independently. What does that difference in process look like in compliance and approval?
Yeah, I mean that's some big things to unpack there, but trying to summarize, when you think captive agent, now I'm talking to a consumer, you think captive agent, you're thinking someone who's captured by the organization. They're like an extension of an existing organization. They're going to play by, sing by, live by that major institution's rules. So they're going to have a committee or a group of managers or whoever who are going to come up with the product shelf. They're going to come up with the offering, and the captive agent is just a representation of what that offering is at a very high corporate level. So very similar to when you walk into a bank and they maybe have a limited investment shelf, or they may have a limited offering of some kind. It's only their proprietary packaged stuff. That's generally more of a captive agent type environment. That agent is usually given a different kind of compensation package. There might be incentives for them to sell more product over another product. They may have what you call campaigns, which are like sales campaigns, try and get out there this next month and really talk a lot about disability or something
And
like
that's
that.
more pre-selected like technology. And almost, I would say, maybe one of the tiny benefits in there is they have a workflow that throughout their system that's kind of established and that you will adopt, that you
That's
don't have
right.
to
Yeah,
create
you're
from
coming
scratch.
in and it's plug and play. It's you've got you've got all the instructions to bake a cake, and you're not going to stray from that. And you hope that the cake is going to turn out the way you want. So, and decisions are not always being made by the person you're working with. It's going to be through a chain of command and hierarchy and all those things that come along with it. And the difficult thing is that sometimes agents that are in that world become very evangelical about a company or a product or the manufacturer that's employing them. And that not always is in the best interest of a consumer. Because when you think free trade, you think open market, you think unbiased, um, that's not always capable with somebody who is a captive agent. Now, when you think independent, there's risks as well, and we can touch on that from a consumer standpoint. There's maybe not as much oversight. There's maybe not as much care and due diligence around what the independent agent is giving you or providing you. But the nice thing is that most independent agents are product agnostic. They're unbiased, or they should be. Um,
Clarify that care and diligence one so I don't get shot in the comment section.
the
So when you
care,
say clarify that part for me.
yeah, well, remind me the phrasing you want clarified.
You said on the independent side there may not be, and I think you probably have to say
Okay,
it a
there may
different way.
not
There may
be
not
as
be as
much
much
care and
care as diligence.
independence, yeah, or care and oversight. So what I'm what I'm meaning is that in a career captive type agency, there's generally a lot of mid-level and upper-level managers that are always monitoring and checking what people are doing and saying. So they've implemented a lot of mandatory compliance checks. They're not always there. I'm just speaking in generalities. I'm sure it's different in different states, it's different in different provinces, it's different based on the institution that you're with. But generally, you have people that are responsible for you. And in order for them to continue having their salaries, they have to make sure that you're doing your things properly within their scope of what they're allowed to sell you.
Where
An
in the dependent
independent,
side, it's more just I guess the regulators at a higher level, and they don't have as much of a microscope on you.
yeah, when you're independent, you're answering to the regulators. Well, the regulators are going to have a really hard time monitoring and auditing every single file that you're working on. They do random checks, random spot checks, like, hey, here, give us 5 random files, and we're going to take a look at it. But generally speaking, an independent advisor gets to make a lot more decisions on their own. If they are investment licensed or registered, there's going to be still compliance, and we all still are registered with the same regulators. And from a compliance standpoint, we have to meet certain continued education credits and no criminal record, things like that. But an independent advisor, you may see they might be on YouTube a little bit more than a career agent because it's easier for them to just post something online versus a career agent who has 5 or 6 different eyes looking at them saying, hey, take that down, or you're not allowed to put that up there.
So when you were on the captive side, because I think you started there, and it is a good place to start, because you do kind of get that process. But like any good entrepreneur, you're always looking at, well, this part I'd like to make better, and this part I'd like to make better for me, and this part for the client. What was it? Did you ever try to adopt a technology during that captive experience that you had to put through a process, other than putting out good YouTube videos, but an actual thing that was like different than a technology that you were currently using?
Yeah, I would say a lot of times you're met with a no, and it's because risk is too high for those who are in mid and upper levels of management. They're not willing to risk their salaries. They think that enough people are paid at the organization to make those decisions for you, and they're just going to be downloading all of that to you. So I think
Those
that,
may not even always be looked at as seriously as you want. They may just be like, I don't even want to go down this road of exploring this, as opposed to, let me, ask somebody and position it intelligently. Sometimes they'll just, and again, that's not to say all of them, but that sometimes may be the case in those scenarios.
we're heavily generalizing, but I would say this too. This is the other problem with that, or just even being independent. It's the people who sell the most products or who are the highest producers generally have the loudest voice. So you may have a lot of great ideas, but in a career agency, if you're new, if you're not producing a lot, if you're not paired up with somebody senior who has the
How
track
can I
record,
produce a lot if I don't have the best technologies and processes?
well, again, now you're seeing this hamster wheel of inefficiency. You have to go out there and prove that you can sell. Which selling, is that really what we want to be? We don't want to be, you know, running around just trying to push product. Most people get in this business because they want to provide advice and they want to do right by a client. We would never want to go to a doctor who was trying to be the guy who sent out the most prescriptions that month. You book to meet with a doctor to say, hey, what's wrong with me? Or I have this concern. What do you think? If the first response of this doctor was, here's 15 pills, prescriptions, go pick them up and just start pumping them, I wouldn't want to see that doctor. So
That's a good
this
analogy.
industry,
Imagine if he starts bragging about, wow, I got the most prescriptions written in the province last month, so you're probably going to want to go ahead and just follow whatever advice I have.
well, and that's it. I mean, I think that sometimes the issue in career captive channels is it's very product driven, it's very sales driven, it's very close the next case driven. And I'm again generalizing, but I think that that doesn't provide the greatest environment for the consumer. And I think over time, if as people maybe generally a lot of successful agents come from that environment because they have really good training. They have mid and upper level managers that train them constantly. But I find that eventually you outgrow that model and you outgrow it to the standpoint of now you want to be something different. You start to accumulate a clientele that you say, I need to act in the best interest of my clientele. I already earn a good living. I know that if I do the right thing, the income will come. I don't want to follow a corporation's guidelines as to what they deem to be the right
Well,
thing to
I want
do.
to highlight that one part before we get back into I want you to tell us about what your technology process changes looked like and what that approval process looked like in your independent space and partnering with the gentleman you're working with now. But I do want to highlight that I think and I was at a conference, a money conference, money experience conference in Salt Lake City, Utah, in November last year. And I was so encouraged during what was my favorite panel. There was some fintech companies, some regional community banks. They have a lot of regional credit unions and regional banks in the U.S., a lot of competition there, Franklin Templeton. And three of them gave the same answer for, I forget what the exact topic was, but they were asking, well, how do you measure that in dollars and revenue? And all three of them said, we don't. We trust that it's creating something. It's too hard to measure that, but we're trusting it. And I say that to say, culturally, if you're I remember when I first started at a bank in the call center, it was sales, 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 sales. And I just focused on giving the same advice I would give my grandmother. There was a lot of salesy call center reps around me, but I broke records in sales, not by focusing on sales, not being a slick talker salesman, but by trying to be efficient, quickly showing the empathy, trying to understand what's happening, giving some advice, and highlight the part that you said there is if you do the right thing and you create the right culture of giving good advice, the product sale is a natural outcome of the client. Close that trust gap with the client. They're going to want to move forward with financial planning, which means products. All of those things, give them the understanding. So creating the culture that doesn't create this weird environment where they're like giving out gift cards for sending a lead and all these weird blitzes that create these bad leads and everything else. Create the right culture, do the right thing you'd do for your grandmother. The money comes out in the wash in finance. That's my opinion. You highlighted it, and I appreciate that. Tell us What did it look like for you in this independent environment when you wanted to make those changes? Was it just a conversation with you and the other guy?
Yeah, I think that it's something that has to be done delicately. So if I'm speaking to, let's say, the younger segment of advisors right now that are looking for a book to purchase or be a part of, or succession plan, a senior advisor, the first and foremost thing is you better respect this advisor. You need to understand this advisor has built something. They built something incredible. They did it without the advantages of technology and information like me and you have today. And they were able to put together something special that you want to be a part of. So respect that. I would say you want to treat your conversations like you would treat it with either your spouse or your parents. You want to come to it with an open idea and say, hey, I've noticed that I'm seeing some things in an area that could use some improvement. I've spent some time in this area, and this is what I've seen that been able to improve in the process. Number one being, using Teams, as we talked about earlier. It's easier for us to communicate together. I find my email
That's a
boxes
big deal
get
if the
bogged
previous
down.
messages are going through email, though, because imagine getting 10 internal communications in a day where 3 clients have emailed you and they're not that mental work. I mean, there's a reason that people, these really high level people wear the same.
Yeah,
I've adopted myself. If I can find a shirt that really fits me well, I'm buying 6 of those. I don't want
yeah,
to have to go through any mental labor trying to coordinate my stripes with my non-stripes, my colors, whatever I want. Minimum
yeah.
mental burden. That one tiny messaging thing, as silly as it sounds, depending on what you're using now, can be profound.
It's a complete game changer. Having access on my phone. When we first started working together, we had a security software, an IT solution that was housing all, like the server was on site. So I couldn't access it from my phone. It was just unbelievably inefficient. And so it's kind of road mapping a lot of these things out in a respectful way, saying this is how much time we're wasting by not implementing some technology to help us out. And if we can break down what is our cost per hour being wasted, or what is our revenue being lost because we're not able to see 50% more clients, we're not able to book 50% as many meetings. I mean, that's really going to resonate with any business owner. So if you are looking for a business partner to be a part of, number one, you have to make sure that they even want to be a part of growing this business. Or if they're going to succession plan out, they're going to give you the reins and just kind of stay on for 18 months to make sure that the relationships transition, but you're allowed to run the business. You have to think of it like a business because you are a business person. And if you're bleeding money out of inefficiency, well, you're eventually going to get burnt out. And we've seen that happen in many other professions, right? We've seen physicians get burnt out. They're now trying to leverage technology. We see dentists get burnt out. We see teachers get burnt out. Everybody is looking for technology solutions to improve their day. So the first thing that a young entrepreneur coming in and working with a new advisor can bring is, how do you make their life better? How do you give them time back? Because that's what they've been missing. If there's lack of technology and lack of efficiency in the practice, they don't have time. That's what's most valuable to them.
And thank my guest, Nick, so much. If you want to reach out to Nick, he's an awesome financial planner. You can reach out to him at Nick.
Nick at eastcapwealth.com online and find us.
So certified financial planner, that international credential, awesome with insurances, lots of guidance on investments. Reach out to Nick, and we look forward to catching everybody on our next episode. Thank you so much, Nick, for special guest hosting.
92% of people trust referrals from people they know. But there's a better way to make those introductions. Wrap your arms around your client with your professional team. Join your client's team free today. PocketFinance.com.